What's going on, guys? Wanted to do a quick trade recap on a trade that I took today. Unfortunately, it was a trade that led to a loss. I lost about $1,000. Luckily, I'm still up for the week and still going strong for the month. My first loss and first red day of the month. So that's fine. After taking the loss, went back, understood what I did wrong, and I want to share that with you guys so that way I can keep myself accountable and also make sure that you guys keep yourselves accountable and all are able to understand why you're taking losses and how to prevent them in the future. Losses are a part of the game, losses are a part of trading, but the biggest thing is knowing where the losses are coming from, why they're coming, and making sure that you're able to contain them so it's not a repeated habit over and over again. So, coming over to the chart, I have my QQQ 3-minute chart pulled up, which is one of the time frames that I look at when I am trading. So, I always have three time frames look up when I'm trading, and that consists of the 1 minute, the 3 minute, and the 5 minute, and then sometimes the 15 minute if I'm trying to zoom out on a higher level time frame. So this morning I have all my levels marked out. As always, my purple lines indicate the pre-market high and low. The green lines indicate the previous day high and low, and the orange lines indicate the opening range of the first 15 minutes and the first 30 minutes. And for today, it ended up being the same range because we stayed within the same opening print, as you can see, up until almost 11 o'clock. So this morning we did see strong selling pressure, and I did see a lot of relative weakness. We did, and this blue line right here is the low of the first 5 minute candle. So that's another opening range that I tend to use here and there. It's not as reliable in my opinion as the 15 minute and 30 minute, just because there isn't enough data within the first 5 minutes of market open to really allow you to see which direction market wants to go in. And honestly, going forward, I might not rely on this as much as I have been because, again, like today, it led to a loss. But, anyways, I did see the first 5 minute candle within this range. We did start to break out of that first 5 minute range, and this blue line right here again is the low of the first 5 minute candle. I did see a push down to pre-market low, and I did like how volume was kicking in during this candle. So at this point, what I was waiting for was either a break below pre-market low and a retest in order for me to go short. So it would be something that looks a little like this. So if we were to continue down, I would want to see a push down with volume, a retest back here, and this is where I would look to enter to go back towards the downside. And that's pretty much the same exact opening range or breakout or break and retest strategy that I tend to look for and use almost every single trading day. Unfortunately, that did not happen. And another tool that I tend to use here and there is the Fibonacci retracement. I don't want to go too deep into it, but anyways, it's one tool that I like to look for when I'm looking to see what a good entry might be for a pullback. So if I'm not relying on one of my key levels, I like to pull out this tool. So anyways, this is how it pretty much works. So I take the high, the opening print, which is right here, and I go all the way low to the lowest point of the print that I'm looking to find an entry for a pullback. And as you can see here, and I always use the 61% and the 50% retracement. So I filtered it so it's only those two lines. So pretty much how this works at this point is I would look for price to go back to one of these levels, rejected for a move back down. So as you can see here, we did come back to test this 50% retracement, and I'll go ahead and mark that out with my arrow right here. And we did get a lot of selling pressure immediately after a touch of this level, and I also waited for the close of the next 5 minute candle. And at that point, as you can see here, and I'll also show you on the 5 minute time frame, we did get a close exactly at that 50% retracement, and I did choose to take an entry right there. And again, entering outside a key level, in my opinion, is higher risk when it comes to my trading strategy of the break and retest. But in certain cases, once we do test and break initially a key level such as pre-market low that we did, if you do enter and if you do see enough selling pressure or buying pressure if you're going long, it does tend to work out as long as there's volume and supported movement within the market. So I did take my entry right there, and what I was hoping for was a push back down to pre-market low to take my first scale out, and then looking for a further move back down. So we did get a nice push back towards that low of the first 5 minutes. As you can see here, I did not take a scale out, and as you can see, buyers stepped in unfortunately and pushed price all the way back up to previous day high and the high of the opening print. So at this point, I did stop out once we were pushing above that 61% retracement. I did take a slight loss, higher than I would like, because I just had a lot of conviction that there's a lot of selling pressure. SPY was also looking very weak on the day during this time, so I did try to hold a little longer than usual, and that was my mistake. So two mistakes that I made. I like to always wait the first 15 minutes or first 30 minutes of market open in order for me to understand what market direction is, and then take an entry either to go long or short depending on if we do break out of one of those ranges. So that was my number one mistake, is I did not wait for that. I broke my rule. I entered early and I paid the consequences of that. Second mistake I did was holding my loser longer than I should have. So I like to on certain trades I like to only risk 20 to 30 cents on QQQ. And if you've traded QQQ before, you understand that those premiums and contracts are very volatile, meaning they fluctuate very fast. So if you hold past whatever your specific stop loss might be, you're gonna take a bigger loss than usual. And unfortunately, that happened to me today. Still manageable. I mean, I'm still up good on the week, but again, it could have been avoided if I were to just follow my rules. So the reason why this was a stupid loss was, again, like, I understand why I took the loss. And what I should have waited for, again, as you can see here, we came back to test that previous day high. We tested the high of the first 15-minute and 30-minute opening range. We also did test that pre-market high right here, rejected that and came all the way back down. And traditionally, what I would have waited for, my usual strategy that I use every single day, and it worked out later in the morning. We broke below that 30-minute opening range break low right here and the pre-market low. We had a beautiful push down towards the downside. We had a lot of increasing volume. We had a retest back to the low of the 30-minute opening range, and this is where I would have looked to take an entry right here. And I would have set my stop loss above, since the 30-minute opening range break low and pre-market low are so close together. I would have just set my stop loss if we were to push back above pre-market low. And again, as you can see here, that did not happen. So I would have entered at 731.70, and again, as you can see here, a little slower of a move, but beautiful $2 move. This would have paid fantastic once you're in the money. And again, this is the same exact strategy that I've been using every day, and stupid mistake on my part to just not stay patient and wait for an A+ setup rather than taking a riskier setup that I don't take that often. So the lesson learned will be avoided next week, but just wanted to show you guys what mistake I made, what I could have done differently, and what I will look to do going forward next week to avoid mistakes like this. So hopefully this helps out. If you have any questions, concerns, or anything trading related, please feel free to reach out, and looking forward to dropping more gems for you guys soon.